Canadian dollar. I'd like to speak more about Canadian dollar as we have the Bank of Canada's meeting, which will take place today, and its results will be announced at 15 GMT. No policy changes are expected from the central bank. However, traders will still be waiting for the central bank statement to know how it is evaluating the nation's economy. If we look at Canadian economic fundamentals, we will see that they are mixed, but mostly positive. We have seen better GDP figures from Canada. We have seen rather good consumption. Trade deficit narrowed according to the latest data, and some slowdown in manufacturing, some deterioration in business sentiment is at this point not so important. There are significant risks for Canadian economy associated with the expected policy of America's newly elected President Donald Trump. However, it is unlikely that the Bank of Canada will take these risks into account now, as Donald Trump will officially become the US president only in January, by the end of the month, and still some time is going to pass before he introduces some changes to US-Canadian trade relations. So this is more of a long-term risk, and we don't think that the Bank of Canada will pay much attention to it at this day's meeting. So the near-term picture for Canadian dollar should be mostly positive. In addition, we see that oil prices remain supported, remain high. We know that Canadian economy is a big exporter of oil, and this is why Canadian dollar is sensitive to changes in oil price. So higher oil prices after the meeting of the Organization of Petroleum Exporting Countries, which took place last week, represent a bullish factor for Canadian dollar. We expect that oil prices will remain more or less supported. They will be above $45 per barrel for the Brent oil and probably closer to $50. And this is good for Canadian currency. So oil is a supporting factor. Let's have a look at the chart of USD Canadian dollar. Here we can see that after some attempt of the US dollar to appreciate, which took place in the first part of November, USD Canadian dollar failed to overcome 50% Fibonacci level, which is located at 1.3575. Now, actually, the pair went below even 1.33 mark. This level is now a resistance. And in line with our bullish scenario for Canadian dollar after the Bank of Canada's meeting, we can foresee the decline of the US dollar Canadian dollar currency pair with the first target at 1.3190. Here we find 100-day moving average, and it should provide some support for the pair. On the 4-hour chart, we can see that there is a negative intersection of the moving averages. The 50 period moving average went below 200 period moving average, and we also are about to get negative intersection from 100 period moving average with 200 period moving average. These moving averages create resistance for the pair around 1.3415. This is resistance. And if we see the attempt of the pair to recover to this area, here probably once again sellers will begin to pull the pair to the downside. If the Bank of Canada's meeting outcome is bullish for Canadian dollar, then we won't see this setback to the upside in the pair, and it will just move to the target at 1.3190 from the current levels of 1.3278.